Next up, we have Matt Burton from Orchard.
Well, it's great to always see the startup pitch it because it's always interesting to see what was next. I'd actually met the Nova team and have been following them. It's amazing what they've been able to do in a short amount of time. Before I kind of jump in to my presentation, I wanted to start with a little bit of the themes that I've been seeing in this LendIt and kind of comparing and contrasting them to previous years. One of the most interesting conversations I've had in the past 2 days was actually with a reporter who I was out on the expo hall, and he came over and he said, looked around and said, "Wow, I thought this industry was dead. How are all these people here?" And I think that kind of sums up for a lot of the people who have been following the industry from afar. Specifically, if you were just reading headlines from last year, it definitely seemed like the entire industry was in decline. And at Orchard, because we kind of sit at the nexus of a lot of the online lending space, we see a lot of data. And so while there was kind of a pullback within the consumer market, we saw huge growth within small business. And through talking to a lot of our partners, we understood that the real estate industry, which we hope to move into this year, was growing rapidly as well. And so the other takeaway, I think, from this LendIt, from all the conversations that I've been having, is that people are really ready to scale now. I've had countless conversations about how they now feel like they have perfected the underwriting model, they have the right team in place, and they're really going to start to grow this year. And I think that given the fact that we're seeing a lot of institutional investor demand come back into the space, specifically from international investors, this has been a big trend within the space. So I just wanted to start with those kind of anecdotes because it's always interesting to see. I was at the first LendIt, and at that it was very much about discovery. 2014 was kind of the emergence of the asset class. 2015 was the hype of the space, and 2016 was the year of a difficult kind of road for many of the first kind of adversity that the space had faced. So anyway, the one topic I wanted to talk about today is one that I feel very passionate about. All of the people who are in this room and at this conference, it's so exciting to see the participation, but if this industry wants to be able to fulfill its mission and to transform kind of the global credit markets and to make online lending more accessible, transparent, and fair for consumers globally, we have got to expand the tent. We've got to take this industry from the small size that we are today, even though it's 5,000 people, and be able to grow that into thousands of companies. So I wanted to talk a little bit about that. So given that we are at LendIt US in New York, wanted to start out with what is the current market in the US. So there's a little over 500 participants. These are the guys that we track. It's not exhaustive. There's definitely people we've missed, but we think that we have definitely done a good job of tracking all of the different people within the space. And so this is kind of a subset on that side. And one of the great things about the US market is it's evolving all the time. For a lot of the international investors that I speak with, for any of you who know me, I'm on a plane constantly. And they are really amazed at the complexity of the US market, how it's always shifting, how there's always new startups filling interesting niches, and how the innovation is still going very, very strong. And so this is kind of where we are today in terms of the US market. In terms of growth, just looking at the data that we collect, and obviously it's not perfect, but we think it's a pretty good index to the growth within the space. We've seen continual growth within the two major asset classes that we support today, but in the future we'll be able to give data across many more. So we're seeing huge volumes continue to grow. Another bright spot last year was we saw the securitization markets really grow rapidly. And so this is kind of another area to watch because I believe that it will become a core part of the funding mix in addition to retail, whole loan sales, bank participation, vehicles. The securitization market is going to be a big piece of that. And so again, this is another data point that here in the US we're seeing great growth. And I also just kind of want to take a retrospective of what's been going on in terms of types of asset classes. So in 2014, The first full year that I was in this space, the only really asset classes that were in it were consumer, small business term, MCA, and student. Kind of since then, we've seen a huge diversification. And this is happening in two different ways. Some startups are launching, going after these new asset classes, but we're also seeing traditional specialty finance companies start to move into this space and start to better understand how can they leverage some of the learnings and the technology and the relationships that are in this space to be able to improve their business. Because most specialty finance companies in the US are pretty regional, and they want to turn themselves into more of a national lender, and they view our industry as a path there. So, today we see, in addition to the ones I already mentioned, obviously real estate is becoming big. Auto, point of sale, equipment, invoice, medical, energy, and factoring is the current kind of mix that we see. For all of the excitement around the space, it's always good to kind of take a step back and really look at where we are in terms of growth. And even though we've seen exponential growth within the space, we're still very small. This is still very much the early days of this industry. And so while we expect that there will be massive growth globally, and that more and more participants will come in, more traditional lenders will enter this space, helping fuel the growth, in addition to the startups that grow themselves. Today, it's still relatively small in the scheme of the asset classes, but obviously has huge potential. And this has also been a theme that I think you've probably heard a lot. I know it was mentioned by many of the speakers, but we're seeing a lot of partnerships on the bank side. So at Orchard, we partnered with Sandler O'Neill. Cabbage has many partnerships that they've had, but one of them is Scotiabank, On Deck with JP Morgan, and Prosper with Radius. And I think these partnerships are actually a really good start because they allow for information sharing between these two sides. They allow for the economics to start to flow and for people to understand, do they want to build, do they want to buy, or do they want to partner? And the kind of lowest risk start is normally partner. And so I think that's why you're seeing this start. But I think that some of these will end up be just light partnerships that we don't talk about in the years to come. But I do believe that some of these partnerships will end up becoming very, very deep and have huge impacts on the industry over time. For any of you who have spent any time with me over the last 12 months, this is another topic that I'm very passionate about in order to be able to grow this industry. We have got to move this industry from the alternatives bucket into the fixed income bucket. Right now, the type of investor who can invest in this space is very limited because of the fact that all of these assets are illiquid and it's very difficult to access them. For anyone who's tried to negotiate a loan purchase and servicing agreement, it can take up to 6 months right now to be able to buy assets in the space, and hundreds of thousands of dollars in legal fees if you're not careful. And so in order to move this into fixed income, there's a couple things that we need to do. Right? At Orchard, the things that we're focused on is data standardization. You need to be able to look at apples to apples data across multiple players to be able to understand how the performance is. There needs to be liquidity in the space. You need to be able to understand and get a mark on what your loans are worth. And you need to be able to check the box at saying, if I do need to liquidate, there is a way I can do it in an orderly fashion. Might not get the best price, but at least having liquidity, I think, will make people understand that this asset class belongs in the fixed income bucket and not in the alternatives bucket as well. And once this happens, I think that we'll unlock a lot of the larger institutional investors who have been sitting on the sidelines, who are not able to invest in illiquid assets. And so as we look kind of to the future, we need to be going from hundreds of participants in this industry to thousands of participants. I think a lot of times people see these big conferences and they say, oh, this is definitely the top. I've heard that 3 years in a row, right? This is still just the very beginning of a really big shift that's happening because the consumer behavior is shifting. They're not going in traditional retail bank branches. They're looking for new methods, and that's why this industry is growing. But in order for us to be able to achieve the potential it has, we need to have thousands of people within this space. Different types of investors, right? Not just the hedge funds and the PE firms, but more banks, more insurance companies, more sovereign wealth funds, right? And the types of products that are getting originated also must grow, right? We have a good start on a lot of different asset classes, but I'm a big believer in the fact that we're going to see a huge amount of growth by customizing the credit products to an individual borrower. I've seen some really interesting things is people have different products on the small business lending side for dentists versus restaurants versus landscaping companies. And this is what is the potential for us to be able to customize these credit products in a way that will really align the interests of the borrower and lender in a transparent way. And I think that that is room for more and more participants to come in and create that customization as well. And kind of last, I wanted to give a little bit of an update on Orchard. The company is 3.5 years old. We started out with our institutional investor platform. We were doing consulting for many of those clients before we decided to launch, and so that was really driven by the learnings that we had on that side. Shortly thereafter, we launched our Originator platform so that we could be able to help the online lenders within their capital markets and treasury teams scale their businesses, which has been a big success and was a massive growth last year. And then in January, we finally got our broker-dealer and our ATS approved after a long process, which was another big step for the company going forward, so that we can begin to help facilitate some of these transactions that will turn this industry into a more transparent and liquid market. And for us, kind of going forward, one of the things that I've been really focused on is bringing in more strategic partners. So you'll see a couple more announcements from us in the coming weeks, but we're very focused on how can we make this a global industry, how can we start to interconnect all of the different really interesting fintech ecosystems, whether it's in China, whether it's in Australia, whether it's in Central or South America, Europe, or Africa, where there's some very interesting things. And we're seeing the beginnings of actually activity in the Middle East as well, which is great. And so that's been a big focus for us this year. Thanks everyone for their time. And if I don't get to see you, I hope to get to see you soon. And if you don't know about Orchard, please come find us out. We'd love to meet you and say hi.